Let me start with a story that should make you angry. A healthy woman in her 40s bought a short-term health insurance plan. It was cheap, only $120 a month. She had a gap between jobs and just needed coverage for a few months. A few weeks later, she felt a lump in her breast. She went to the doctor. The doctor ordered a biopsy. The insurance company said no. They said the biopsy was not covered because the lump could be considered a pre-existing condition. She paid for the biopsy out of pocket. It was cancer. She needed surgery and chemotherapy. Her short-term plan refused to cover any of it because her cancer was not a covered illness. She was left with over $100,000 in medical bills. Her cheap insurance turned out to be worthless. By the end of this video, you will know exactly what short-term health insurance is, why it is so cheap, and the 5 hidden traps that make it a financial disaster for most people. I will break down the real risks, including pre-existing condition exclusions, lifetime dollar limits, and the fine print that lets them deny coverage for nearly anything. You will learn the only 2 situations where short-term plans make sense, and the much better alternatives that cost only slightly more. Do not buy a short-term plan before watching this video. It could save you from bankruptcy. Let me start with what short-term health insurance actually is. These plans are designed to fill gaps in coverage. They are not required to follow the Affordable Care Act rules. They are not required to cover pre-existing conditions. They are not required to cover essential health benefits like mental health, maternity care, or prescription drugs. They can impose annual or lifetime dollar limits on your coverage. And they can deny claims based on your medical history. The only reason they exist is because the Trump administration loosened rules in 2018 to allow these plans to last up to 12 months, with renewals up to 36 months. The Biden administration tried to reverse that, but legal challenges have kept the longer terms in place in many states. In 2026, short-term plans are still widely available. Now here is the pattern interrupt that most people do not know. The cheap monthly premium is a trap. You pay $100 to $200 a month, and you think you have insurance. But when you actually get sick, you discover that nothing is covered. A study found that short-term plans deny over 50% of claims, compared to less than 2% for ACA plans. That is not a typo. 50% denial rates. They make money by collecting premiums and not paying claims. That is their business model. Let me break down the 5 dark secrets of short-term health insurance. Secret number 1, pre-existing condition exclusions. Under the ACA, no insurer can deny you coverage or charge you more because of a pre-existing condition. Short-term plans have no such rule. They can review your medical history before they decide to cover you. If you have any condition, even something as minor as seasonal allergies or a past pregnancy, they can exclude coverage for anything related to that condition. In some cases, they can retroactively deny your claim by arguing that your illness was related to a pre-existing condition. The woman with breast cancer had a biopsy years earlier for a benign cyst. The insurance company argued that her cancer was related to that previous biopsy and denied coverage for her entire cancer treatment. That is legal with short-term plans. Secret number 2, no essential health benefits. ACA plans must cover 10 essential health benefits, including emergency services, hospitalization, prescription drugs, mental health care, and maternity care. Short-term plans do not have to cover any of these. Many exclude mental health entirely. Most exclude maternity care. Some exclude prescription drugs. If you have a heart attack, they may cover the emergency room, but not the ambulance, not the follow-up care, and not the medications you need. You are left with piecemeal coverage and massive out-of-pocket costs. AFCRIT number 3, annual and lifetime dollar limits. ACA plans cannot have dollar limits on your coverage. Short-term plans can. You might buy a plan with a $100,000 limit. That sounds like a lot. But a single surgery can cost $50,000. A cancer treatment can cost $200,000. Once you hit the limit, you pay everything else out of pocket. You have no protection. Secret number 4, medical underwriting and rescission. Short-term plans can review your application after you file a claim and decide that you omitted something. They can retroactively cancel your policy, a practice known as rescission. If you forgot to mention that you had a doctor visit for a cold 2 years ago, they can argue that you committed fraud and cancel your coverage. You are left with no insurance and a stack of bills. Rescission is illegal for ACA plans. It is perfectly legal for short-term plans. Secret number 5, no guaranteed renewal. Your short-term policy has a fixed term. When it ends, the insurer can refuse to renew you for any reason. If you got sick during the term, they will almost certainly refuse to renew. Now you have a pre-existing condition and no insurance. You cannot buy an ACA plan outside of open enrollment unless you have a qualifying life event. You are stuck. This is called the coverage cliff, and it ruins thousands of people every year. Now, let me give you the 2 situations where short-term plans might make sense. Only 2. Situation 1. You are young, healthy, and between jobs for less than 60 days. You have no ongoing medical conditions. You take no prescription medications. You are not planning to get pregnant. You have a significant emergency fund to cover potential out-of-pocket costs, and you are willing to accept the risk that if something catastrophic happens, you might still face huge bills. In this narrow scenario, a short-term plan can be a cheap bridge. But you must be honest with yourself about your health and your risk tolerance. Situation 2. You are a high-income earner who wants catastrophic coverage only. You are willing to pay for routine care out of pocket. You just want protection for a true medical disaster. Short-term plans can be cheaper than a high-deductible ACA plan for some people. But you must read every word of the policy. You must understand exactly what is excluded. And you must have the financial reserves to cover a denial. For everyone else, short-term plans are a bad deal. The better alternatives are the ACA Marketplace, COBRA continuation coverage, or a spouse's employer plan. Let me compare them. An ACA plan may have a higher monthly premium, but it covers pre-existing conditions, has no lifetime limits, and covers essential health benefits. If you qualify for subsidies, which most people do in 2026, an ACA plan can be cheaper than a short-term plan. COBRA is expensive, but it keeps you on your employer's plan with the same coverage. You have 60 days to elect COBRA, and you can wait until you need it. That is free retroactive coverage. A spouse's employer plan is often the cheapest option. Adding you to their plan may cost only an extra $100 to $200 per month, and you get full ACA protections. Let me give you a real-world comparison. A 40-year-old in Ohio earning $50,000 per year qualifies for ACA subsidies. Her subsidized silver plan costs about $180 per month. A short-term plan from a major carrier costs about $110 per month. The short-term plan has a $1 million lifetime limit, a $10,000 deductible, and excludes maternity, mental health, and prescription drugs. The ACA plan has no lifetime limit, a $2,000 deductible, covers everything, and caps her out of pocket at $8,000. For $70 more per month, she gets complete protection. That is a bargain. Now let me address the UK and Canada. In the UK, short-term health insurance is not really a thing because the NHS covers everyone. Private insurance supplements the NHS. You would never buy a short-term private plan as your only coverage. That would be foolish. In Canada, the situation is similar. Provincial health plans cover hospital and physician services. Short-term private plans might fill gaps for dental or drugs, but no one relies on them for core medical coverage. The dark side of short-term insurance is primarily an American problem. Let me give you a final warning. Some short-term plans are marketed as ACA alternative or Obamacare replacement. That is a lie. They are not regulated by the ACA. They do not have to follow the same rules. The salespeople earn high commissions, sometimes 50 to 100% of your first month's premium. They have every incentive to sell you a plan that will not cover you when you need it. Do not trust them. Go to healthcare.gov instead if you have already bought a short-term plan and you are worried. You have options. You can cancel at any time. Most short-term plans offer a full refund within the first 10 to 30 days. If you are past that window, you can still cancel and switch to an ACA plan during open enrollment or during a special enrollment period if you have a qualifying life event. Do not stay in a bad plan just because you already paid. Let me recap the key takeaways. Number 1. Short-term health insurance is not regulated by the ACA. It does not have to cover pre-existing conditions, essential health benefits, or lifetime limits. Number 2. Short-term plans deny over 50% of claims, compared to less than 2% for ACA plans. Number 3. Pre-existing condition exclusions can leave you with zero coverage for any illness related to your medical history. Number 4. Rescission allows insurers to retroactively cancel your policy if you forgot to mention a minor health issue. Number 5. Short-term plans have fixed terms and can refuse to renew you if you get sick, leaving you uninsured with a pre-existing condition. Number 6. The only two situations where short-term plans make sense are for young, healthy people in a very short gap or for wealthy people who want catastrophic coverage and understand the risks. Number 7. ACA Marketplace plans, COBRA, and spouse plans are almost always better options. Number 8. Never trust a salesperson who calls a short-term plan an ACA alternative. It is not. Here is what I want you to do right now. If you are considering a short-term plan, go to healthcare.gov first. Enter your income and see what your premium would be with subsidies. You might be surprised how affordable an ACA plan is. Then get a quote for a short-term plan. Compare the coverage side by side. Look at the exclusions. Read the fine print. That 30 minutes of research could save you from financial disaster. If this video helped you understand the dark side of short-term health insurance, hit the like button. It helps more people avoid these dangerous plans. Subscribe and turn on notifications so you do not miss my next video, which is called The One Short-Term Plan That Is Actually Safe and Why It's Rare, and comment below. Have you ever bought a short-term health plan? What was your experience? Share your story. I read every comment. Thanks for watching. Now go protect yourself with real insurance. See you in the next one.